welcome to We Got You Covered on RVN TV. I'm your host, Rob Shestack, and we come to you each week to talk about various topics in employee benefits and insurance. And this week we have with us Lee Stokes. And Lee, we're going on 20 years knowing each other.
We are.
And as you said, it's been a good ride.
Has been a great ride.
And it's going to get better.
Always.
A little bit background on Lee, 30 years experience in the insurance space. Last 20 years primarily focusing on life, health, accident, property casualty for employers.
Correct.
Your specialty is helping employer groups and government contractors work under what they call the Service Contract and Davis-Bacon Acts.
Correct.
Right? You served as Vice President of National Voluntary Benefits Sales for Amwins Group, which is a large insurance wholesaler. That's where we got a chance to work together. And you're currently the founder and CEO for Compliance Services Agency, which is the one who focuses on the Davis-Bacon Act.
Correct.
And what I'd like to do is each show, depending on what the topic is, I like to share some statistics with the viewers to get us started.
Sure.
It took over 4 years to pass the Davis-Bacon Act. It's been around for over 80 years, going on 80 years.
Correct.
Since 1931. And it was primarily established, and I want to get this right, to establish wage parity to promote fair competition when competing for government building and maintenance projects.
That's absolutely correct.
And we're going to go into this in a little more detail. The Service Contract Act was passed in 1964 for a similar purpose, for contractors bidding on service work, not construction, for federal government.
Absolutely
To
correct.
keep it competitive, right?
Yeah,
not that one has an advantage over another. And today, both laws are still applicable on all government contracts.
Absolutely correct.
Period. So if you want to do business with the government, you have to follow these rules.
That's correct. If you're providing any type of construction project or if you're providing some type of service to the federal government, you're going to be working under one of those acts, and the laws are applicable to you and your business.
And they can be very confusing, and they can be very complicated. So folks such as yourself can help employers navigate what these acts mean relative to their employee wages and the services that they're providing and charging the government for.
Correct.
So to start us off, what contracts apply to these laws? Because from what I understand, not every contract applies to them, but most of them do.
That's true. So generally, it's contracts in excess. It's can vary somewhat by state, but for the most part, it's contracts above a few $1,000s. So if you're bidding on a contract, let's say to wash the windows at a federal building downtown, you're going to be falling under the Service Contract Act. Generally, it's going to be a 3-year contract, and those contracts are locked in at a certain wage, at a certain rate, and the only time a contract or a service contract might fall outside of this is if it's just something really small. A window is broken at that federal building, and it's going to cost $500 to repair. Those things are exempt, from the law. Construction or maintenance projects the same way. If you're just maintaining something, there's a grate that was cracked in the middle of the street, not a big deal. They're not going to, have you adhere to a bunch of different laws and regs. They're going to have you fix it. So there's some common sense, built into the laws.
So if it's a one-off, fix it, this window's broke, the door's broke, whatever it is, paving a parking lot one time, they're okay.
Yes, generally they're okay.
So it's ongoing type services.
That's correct, yeah.
Okay. So we talked about contracts where the law does not apply. There's something called the principal purpose test, and they're contracts to provide direct services to a federal agency. So those are not subject to the Davis-Bacon Act?
Not generally. And so, again, there's a few exemptions in the law. Some of them are around technical services, so highly technical services, IT professionals. I'm trying to think of another. There's probably 3 or 4 very high-level engineering projects. They wind up being exempt, and they wind up being exempt generally because they don't have a definable contract amount. It's an ongoing project to engineer something that's going to be used in the space station or something like that. And so although they have a contract with the federal government for this work, these laws are not necessarily applicable to them. These 2 laws, the Davis-Bacon and the Service Contract Act, generally have a finite time period associated with them and involve constructing something or servicing something, not providing a product, but actually just constructing or servicing something.
So if I'm providing a service to the federal government, are there any type of employees that I would have that would be exempt from the requirement of following certain wages and benefits?
So the answer is most likely no. When you are bidding or awarding or awarded one of these contracts, you may have a host of employees that already work for you, and you're going to assign X amount of these employees to this particular project, and they're going to be on that project for, again, generally multiple years, especially under the Service Contract Act. And along with all these contracts, there is something called a set-aside requirement for minority-owned businesses. So somewhere between 5 and 20% of each of these contracts, you will have to outsource, if you're not a minority-owned business yourself, to a minority-owned business. So that's the only time that you'll be using employees outside of, people that are not in your direct employ.
Is that negotiable?
No, not with the federal government. It's not negotiable at all.
So it seems like, is there a lot of record keeping involved with this?
Yes, and that's the biggest challenge for these private contractors. And I'll give you an example. Let's just say I own a janitorial company, and I'm doing commercial work, and all of a sudden I decide I'm going to bid on this project, to wash these windows in this downtown building. I'm subject to the Department of Labor regulations that require me to not only keep track of the hours each person works on that building, but the federal government is going to give me what's called a fringe allotment of $4.61 an hour in order to purchase benefits for this person. So then I've got to comply with the contract, which says that I have to show that by the hour how this $4.61 inured to the benefit of this employee. So, for example, if at the end of the month, they worked 40 hours and that's roughly $800, I got to show that so many hours went towards buying them major medical, maybe so much went towards voluntary, so much went into retirement. I not only have to keep track of that, but I have to report to the Department of Labor every single month while I'm doing these contracts. And somebody who's just doing strictly commercial work is not generally subject to that kind of scrutiny by the Department of Labor. At some point in their contract, they're going to get audited, and the fines are pretty substantial, including being barred from future contracts with the federal government.
So who pays the $4.61? Do I pay that? So I go to the government and I say, I'm charging you $25 an hour. Of that $25, I must take $4.61 and use it towards the benefits for that individual per hour.
No, it's actually, it would be nice if it was something like that. When you bid on a contract, inside the contract it says you will pay your employees X amount per hour, $15 per hour.
Okay.
And we will pay you, the federal government will pay you you're going to report to us your hours worked every month, and we're going to give you $4.61 times all those hours as a pass-through, a direct pass-through through the employer to purchase benefits for the employees. So the Act says that it's at the discretion of the employer how that money is spent on bona fide benefits, but that money technically belongs to the employees per the original contract.
So I go to the contract, I say, they say you have to pay everybody at least $15 an hour, and you got to give $4.61, so that's $19.61, and then I mark it up from there. I'd say, but I'm going to charge you $23 an hour, and that $3 or $4 difference is what I make as a company.
Again, that would be very good if that was the case. That's not the case. The margin on all these contracts last year, the numbers just came out, were between 1 and 5%. So and that's all. So you don't have the latitude of increasing the amount that the government says that you're going to charge us, for these. When you bid on a project, you agree to their terms. That's the hour. That's the time frame. It's the hours worked each week. It's in the case of security guards, which falls under the security Service Contract Act. You must have a guard present at these different locations between these hours, and every minute counts. So they clock in, they have to be there, and so you pay them $18 an hour, and at the end of the following month you'll get a check for $4.61, so you can pay for benefits and keep those people employed. But the margins on these contracts are always very small.
Why would I want to do a contract then?
Well, so if you do enough of these contracts, and that's what winds up happening, they become what's called federal contract junkies, because they see, well, at least it's a steady source of revenue, small margins, but steady source of revenue, and they can bid on a bunch of others, and they wind up having, these contracts, all over the country and staffing them in different parts of the country. And these are generally contracts in excess of $5 or $6 million.
So 3% of a big number is better than 100% of zero, as we say, right?
That's exactly correct.
Gotcha,
Yep.
gotcha. So let me ask you this. So what happens if I can't spend less than 461? Can I spend more than 461?
You can spend more than 461.
But I have to spend at least 461.
Right, unless you want to go to jail, because the way it works is, and this does happen, the check comes into this contractor who's been working on commercial work, and it's a substantial check, and they say, well, I'm providing benefits to them, but they don't realize those benefits only add up to $2.49, and they pocket the rest of that money. Just because they lack a level of sophistication. So what most contractors have gone to doing is hiring a third-party company to manage that part of the administration. So in other words, they said, we don't want to have anything to do with benefits. We don't want to touch that $4.61 an hour. So they hire a third party. There's 4 or 5 large ones throughout the country that'll do all that administration for them, and then send all the reporting to the Department of Labor. So contractors really have got to the point of sophistication where if they've got more than one contract, it becomes too much to manage, and they're outsourcing that in the same way that in the health world we might outsource something to a third-party administration company.
Gotcha. So there's really 2 parts to it. It's, if I want to bid on these government contracts, I should hire somebody to help track the hours and the administration of it, and then you need somebody to help spend the 461, like yourself as an insurance consultant.
That's correct. I would go in and say, okay, so you've got 800 hours to work with, you've got 67 employees you have to provide bona fide benefits for, and that all starts with major medical, now that we're past the Affordable Care Act, and then we can backfill from there. So if I have $800 to work with, I might spend $550 on a major medical plan, then I would look to go with maybe a dental and a vision plan, then I would supplement with voluntary benefits to cover the gaps in their major medical coverage, and then whatever was left over, we would channel to a 401k or some other type of retirement vehicle.
So there's a list of benefits that are eligible.
That's
quote
correct.
unquote. Because that comes to just under $10,000 a year for an employee who works 2,080 hours a year.
That's correct, yeah.
Wow. Well, we come to that time. It's our break.
Okay.
So we're going to recognize some of our sponsors. But when we come back, I want to talk about some of the penalties for noncompliance. Sure. And then we're going to talk about some of the benefits that you can provide these contractors to spend the 461.
Great.
So it's like you have a budget and you say, hey, I'll help you spend the money.
Right? Exactly. It's exactly
Sounds
what
good.
it is.
So we'll be right back with Lee Stokes talking about the Davis-Bacon Act and government contracts on We Got You Covered. See you in a few.
The greatest fighting force the world has ever seen. But what does it take to strengthen our service members? What does it take to let them know that we stand behind them, wherever they are? What does it take to bridge the distance and keep them connected to family, home, and country? And what does it take to prepare them for their future when their service to the nation is complete? What does it take to strengthen our service members so they can be the greatest force for good in the world? It takes a force. Be a force behind the forces. Share a message today at force.uso.org.
I want to be a contender. I want a warm belly to sleep on.
A big house.
How do I look? Do I look good?
I want to play hard.
My nails done once a month.
I want
a home.
I just want a home. I want someone to love.
Last year, more than 30,000 companion animals came to us without homes. 20,000 of them were felines. Let's make some homes together.
Add us on social media.
Welcome back to We Got You Covered on RVN TV. We're here with Lee Stokes talking about Davis-Bacon and Government Service Contracts Act. And Lee, right before the break, we were talking about what the obligations are if you want to do business with the federal government, from agreeing to the terms of the contract and then having to spend $4.61 per hour per person for benefits. And we're talking about some of the compliance issues and the administration that's involved with this. What if you don't comply with this? You said before the break, you know, there are people out there that may spend $3 of the $4.61 and then they pocket the other $1.61,
Right.
and that's illegal. So what are the penalties if you don't comply? I mean, prison?
No. So last year, the last time I saw some stats, but prison is certainly an option for the federal government, because they're dealing in hundreds of thousands of dollars. When you get into the larger companies, you're talking about millions of dollars. And I just want to clarify one thing. So under the Service Contract Act, you've got a $4.61 fringe, which is standard across all industries or across all states. Under the Davis-Bacon Act, the fringe actually varies. The fringe could be $8 for one employee and could be $12 for another employee and $1.50 for another working on the same job, because under the Davis-Bacon Act, the fringe allotment varies by trade, zip code, a multitude of other things that a person is doing actually while they're on site. So what winds up happening is, from a fine standpoint, generally they get audited at some point during their contract period. And what they look for, the auditors look for, is how are you administering these benefits by the hour? They want to know how much does medical insurance cost by the hour? So we're forced to take benefits that we're normally used to charging per month. We have to break them down, and we have to say, well, major medical cost you X amount per hour of employee work. Dental and vision the same way, and all benefits. So there needs to be a very complex reporting system for doing that for the Department of Labor. So if they come in and you're in violation, you know, their options, depending on how egregious, are to literally shut you off from all future contracts and stopping that contract midway. And I have had clients that has happened to, where I picked them up as a client because a new client, because one of my clients took over a contract that somebody else lost to this type of issue. Last year, I believe the number in the first quarter alone was $110 million the federal government fined contractors for non-compliance around these issues. Again, contractors sometimes have the mindset that, you know, they would rather, rather than ask for permission, they'll beg for forgiveness later. They say, well, I didn't realize that was in my contract. So what we do as a company, we actually look at their contracts. When we put the package of benefits together, we make sure, and we not only make sure, but we guarantee that they're in compliance with the federal government. And if they allow us to do the administration, when I say we guarantee, we have a $150 million bond that we put up, and we guarantee that if they're fined for the work that we're doing on their behalf, they don't have to pay anything.
Wow, that's pretty impressive. So let's talk about the $4.61 or the $8 to $12, depending on if it's Davis-Bacon or the Contract Services Act. What kind of benefits would be eligible? You said medical. That's obvious.
Right.
Dental, vision. What about other things like identity theft?
So there's an actual list of what are called bona fide benefits. So identity theft typically would not be something that would fall under to a traditional bona fide benefit. It has to be a fully insured accident or health-related or life-related product. So for example, there's a host of voluntary benefits that are available to be used as bona fide benefits: critical illness insurance, accident insurance, certainly life insurance. Hospital indemnity also is a very valuable benefit to these guys today, because most of them are working on projects where their major medical has a very high deductible. So these types of financial protection products are becoming more and more important as the years go on and the cost of healthcare gets out of reach for most of these guys. And they're trying to be as competitive as possible. So the fringe dollars could be spent on two things primarily: not just bona fide benefits, but the cost of administering these benefits per the DOL regulations. So again, out of the $4.61, they can hire somebody, for example, for 50 cents of that to do all the administration. So keep track of all that, do all the reporting, give them a some type of reporting, online reporting module, and give them a way to administer their benefits. So that's what most are gravitating to today to stay in compliance.
But it has to be you can't say I'm charging you $4 of the $4. It has to be a reasonable amount.
Right, absolutely. But again, you can take, as the employer, some money out of that fringe for your overhead and expense of administering that very same fringe.
Okay.
So which is, kind of a unique value proposition for the companies that do it, because they can walk in and say, it doesn't cost you anything out of your pocket to do business with me.
Right, right. And then are there certain carriers that do this and other carriers say, I don't want to be involved with this, or it really doesn't matter?
So one other aspect of these benefits is they all have to be held in irrevocable trust. So that's a very good question, because there are carriers that don't necessarily like this space. Cigna used to be very large in the space, not so much anymore. Aetna, United Healthcare are all major medical carriers that still write in the space. You don't see a lot of Blue Cross Blue Shield plans in the government contracting space. And as far on the voluntary benefits side, most of your major carriers out there are willing to write benefits to these guys because it's just really good business, and it looks like employer-paid business, although it's really just a pass-through from the employer on behalf of the employees to these carriers.
And what happens if the employee wants to increase what they give them? So let's say my $4.61, and I know that number can vary, but we'll just use that for illustrative purposes. Let's say it comes to $4.61, and I want to buy additional life insurance and spend an extra $1 an hour. Can I do that as an employee, or
the answer is
part of the contract?
Absolutely yes, as long as your employer is willing to, do the payroll deduction for that, or if the life insurance carrier is willing to take a direct payment from you via sending you a bill every month. But absolutely, you could buy benefits, either way.
And let's say me, as the person who was providing this government contract, what happens if I want to spend $5? I want to take 39 cents out of my pocket per hour to get better employees, or maybe go out there and I'm bidding against somebody else and I want the best of the best and I want a good recruitment of employees. Can I do that?
You absolutely can. And one of the biggest challenges in under both of these acts is there's a skills gap in the marketplace, and finding and staffing sometimes within 30 days, which is usually the ramp-up time for these contracts. You may have to hire 5 people, you might have to hire 500 people. So depending on your competition for labor, you can certainly make any of those adjustments as long as you're at least spending that $4.61, and that's what you're going to be reimbursed from the federal government.
So how does your company actually help me? So if I want to go after a government contract and I say, I have no idea, they said, call Lee Stokes, I call you, where do we start this conversation?
So again, good question. I think we have a unique way of assisting brokers who don't really have a lot of knowledge around this particular space, but they might come across a contractor that they were providing commercial benefits to, and all of a sudden they say, wait a minute, I just got this federal contract and I have to administer it differently and all that. So then they seek out people like myself. So generally it just starts with bringing myself or one of my staff into the mix, and then first thing we do is say, get us a copy of the contract, and we'll make sure that you're adhering to everything that you need. And sometimes, what they're doing is already okay. They only have to add a component of administration. In a lot of cases, though, they're going to say, no, we don't want to touch this. We want you just to take over everything. So in that case, we'll put together the package of benefits. We'll put the administration package together. Again, there's no additional cost to the employer for utilizing our services. We'll give them that compliance guarantee. The monies that we make over and above selling the insurance would be paid out of that fringe allotment. So really, it's kind of a personal engagement. I just won a case in January, January 1st of this year. 110 life case, was a broker in Houston. Exact same scenario I just explained to you. They had a long-standing client who just got awarded one of these contracts, had no idea what to do. Somebody gave him my name. I flew down there, met with them, got them all set up, and now we're doing everything. We're doing all the compliance for that contractor. around this particular contract. We're providing the benefits, the administration, and the good news is the broker still makes all their commissions on the insurance products.
Gotcha. And then you get part of that commission to do some of the work you're doing.
That's correct, yeah. And we make a lot of the money on the administration. Remember, we're charging administrative fees, to do all this compliance work.
Right.
And so we get that out of the fringe, yeah.
Which is part of that 50 cents plus or minus that we talked about
Correct.
In the first half of the show.
Correct.
Okay, pretty good. So what makes you different than what some of your competitors? It doesn't sound like there's a lot of competitors in this space.
There aren't. There's probably 4 or 5 people in the entire country that do this on a fairly large scale. And there is one distinction that we have that no other administration company has, and that's the fact that we are also a government contractor. And we are not only a government contractor. My partner is a service-disabled veteran, so we have minority-owned status. This is really important, Rob. When a company comes and does business with us, not only does it not cost them anything because we're getting paid from the fringe, if they use us for these services, that counts against their set-aside requirement for
That 20%.
the minority-owned businesses. So let's just say that they're a landscaper. So instead of having to outsource cutting grass to another party, they can actually hire us to do their administration, which they have to do anyway.
And that counts towards it.
Yes, and they don't,
Wow.
and their employees don't lose any work.
So I kill 3 birds with 1 stone. I get administrative
Yes.
services, I get my minority-owned out of the way, and then I get my benefits
Yes.
covered.
And there is nobody else in the country that has that designation as both a government contractor doing administration for these acts and, in fact, is a minority-owned business.
Wow. Well, Lee, unfortunately, we are out of time.
Time went fast.
Thank you very much for coming on to the
Thank you,
show. I
Rob.
learned a lot. This has been great conversation. If anybody wants to get a hold of you to talk about the services, if you're an employer
Sure.
that does these government contracts, or you are an insurance consultant or broker and you don't know how to navigate this area, you definitely want to reach out to Lee. So Lee, can you tell the audience how they can get a hold of you?
Sure. Best way to get hold of me is I have an office here in southern New Jersey. I also have an office in San Antonio, Texas, and one in Gaithersburg, Maryland. And you can reach me through our 800 number, 1-800-687-3995, and I'm extension 101. That's the easiest way to get hold of me.
Lee, thank you very much. Thank you for joining us this week on We Got You Covered, talking about government service contracts and the Davis-Bacon Acts. Please remember, when you have the opportunity, please pay it forward. We're here at Lee Stokes, and we'll see you next week.
Thank you.
Have a good week.